We're going to solve the first 12 of these 18. The remaining 6 have to do with Excel, and we're not going to be using Excel in this classroom, though there may be some questions about it, but I'll let you address those. They should be straightforward and simple enough. So we're going to handle the first 12 problems. And this is good practice for you. So number 1, here we have the data here presented at the beginning of the month and the end of the month. And if you read the information here, during May, you have $68,500 in raw material, all direct, and was used in production. The company's predetermined overhead rate was $12 per direct labor hour. It paid its workers $15 an hour, a total of 500 hours. Let's see, is this the right one? No. Well, in any event, the raw material purchase was, okay, well, now they show here $83,000, and here's how I did it. First of all, not all the information here is relevant, okay? What did they say the ending was? The ending raw material inventory was, I don't see it. Okay, well, I'm trying to see this, because I work these problems out myself too. Even though I don't have to, they give me the answer, but I like to know how difficult it is for my students when they do it. Oh yeah, oh, it's right there. Wow, I'm looking in the wrong place. The way I did it is I go back to what you learned in 1810 and early on in 1820, hopefully. You have, in terms of inventory, beginning inventory. You might want to write this down, even though it's in the slides also, I think. Beginning inventory plus what you purchased is what you have available. And then what's left must have been what you sold or went to, was used and went to finished goods. So think about that. Raw material, what you began with, 35,500. Okay? And you ended up with $50,000, and you used, which is like being sold, 68,500. So the way I did it is I wrote down beginning plus purchases, and so the beginning plus purchases equals available. And then I drew 2 lines from available in 2 different directions. One is the ending, and the other would be what you used. So we got to fill in the blanks. We know we began with 35,500. We know we ended with 50,000, and we used 68,500. Well, don't forget what you ended up with, 50,000, and what you used in production is 68,500. Add those 2 together, you get what was available, 118,500. So if you had available 118,500 and you began with 35,500, then you must have purchased $83,000 worth. And that's what we have here. Now this is how they did it. And I make, doing the same thing. But to me, again, I try to keep it simple. Well, what I think is simple. Beginning plus purchases equals available. available for production or available for sale. And then what you end up with, the rest of it must have been sold or moved on to finished goods, since we're talking about work in process here. Or talking about raw material that's moved to work in process or was used. And then you just fill in the blanks. But anyway, that's how I did it. Okay, let's go to the second one. And again, I'm trying to not show you the answer, but you're going to see it anyway in a few moments. Again, and not all the information they give you, you need to use. You have to know what information applies to the question. So Baca Corporation applies manufacturing overhead on the basis of direct labor hours. At the beginning of the period, the company based its predetermined overhead rate on total estimated overhead, manufacturing overhead, 243,900, and estimated direct labor hours. Right there, we can determine we can now figure out the predetermined overhead rate. Don't forget, the formula for predetermined overhead rate is estimated manufacturing overhead total divided by the estimated allocation base. In this case, allocation base are direct labor hours. So 243,900 divided by 8,900 gives you 27.40. Yeah, 27.40. So that's the predetermined overhead rate. Now, how many actual direct labor hours were there? 6,000. So 6,000 times 27.40 is 164,427. Okay, so now the applied overhead was, well, it came out, they said the closest one, that came out exactly to 164,427, which would give you the last answer there, close enough. And then they show you how they did it. There's the way I did it, actually. There's no difference this time. Okay, so you need to take a look at this. Okay, now let's go to number 3. And again, well, they show you the answer, but this is the number 3. During March, Pendergraph Corporation incurred $74,000 of actual manufacturing overhead. During the same period, the manufacturing overhead applied was $76,000. The journal entry for actual manufacturing overhead would be a debit. Don't forget, the debit side of manufacturing overhead account is the actual manufacturing cost. The credit side is the applied. We're here to talk about they ask you what was the actual manufacturing overhead. It would be a debit to manufacturing overhead. Okay? Just to let you know. Okay. And there that is. Okay. Number 4. You need to look at it this way. Here we have the following T accounts, okay? And what they're asking us, what is the amount of cost of goods manufactured for the year? Cost of goods manufactured. Well, where does cost of goods manufactured? How can I put it? You go from raw material, direct labor, and direct material to work in process, and from work in process is transferred over to finished goods, and that becomes your cost of goods manufactured, actually. So look at the work in process. It's zeroed out, right? It is zeroed out. In other words, there was a debit of 519,600. Then all of it was transferred out to what? To finished goods. Look at finished goods. 519,600. Credit there, debit to finished goods. So that means that they manufactured $519,600 of cost. Okay, hope you see that. Do they show you here? Well, they say cost of goods manufactured is represented by a debit to finished goods and a credit to work in process. And that's true, and that's what you see here. Look here again. You debited all. You transferred raw material, or direct material and direct labor, and applied actual overhead applied to work in process. You debit work in process and credit manufacturing overhead. You see that? That's applied. But that entire 519,600 was zero, was credited and transferred over to finished goods. That means from work in process to finished good is cost of goods manufactured. So that's why you have that. Okay. Number five is a bit tricky, because they use the process of elimination. What is the direct material cost given this information in the T accounts? Well, direct material cost. Okay, we have raw material here, and $9,100 was transferred out. Now, some of that, not all of that, is direct material. Some of it's indirect material. And what they're asking you to, I guess, believe, we got 9,100. That's 28,500. You see, some raw material was transferred to the actual overhead. Indirect will be transferred to actual overhead. And the direct material will go to what do you call it? The work in process, or WIP. Well, if you look at the first entry, because the beginning balance, okay, we ignore. But you look at $9,100 was transferred out of raw material. And typically that's the first thing before labor and before overhead. So you take the $9,100 that's transferred out. Well, if you look at the first entry in work in process would be raw material, $6,250. And if you take $6,250 plus the $2,850, you get $9,100. So you have $6,250 transferred to work in process was direct material, and the rest of the raw material was indirect raw material, which is $2,850. So that's what it does, and that's how they wrote the entry there. So we have to understand that the first entry on work in process will be raw material, and whether it's work in process or manufacturing overhead. I don't like that, though it is a safe assumption and perhaps a correct assumption that the first entry into work in process would be raw material. Anyway, I'm not going to do that to you, So, number 6. Again, we have T account information. And this is by a process of elimination also. Oh boy. What's direct labor cost? Okay. Well, it would be the 8550. It's the second entry. We know the first entry was raw material. This third one is 8350. You see, I got the thing. You see here, this was overhead applied, which you debit that and credit the manufacturing overhead. So it's not that. So it had and it's not the 6250 because that's raw material. That's the first entry in work in process. So direct labor has to be this one here, 8550, process of elimination. Again, I don't think it's necessarily a fair question to ask, or at least ask it this way, but there it is. Okay. Number 7, and again, they're asking the direct material cost for May was. You got all this information here. Okay, so raw material beginning. You began with 27,500. Okay, and during the month you purchased 78,000. So go back to that template I said. What you begin with plus what you purchased is what was available, and then what was left means the rest must have been used or moved to the next level. So if we have 27,500 to begin with in direct material, they say it's raw material account, okay? And so we got raw material, and you ended up with $51,000 in raw material. You purchased 78,000. So 27,500 plus 78,000 was the total amount of raw material you had to work with, which is 105,500. And what was left was 51,000, which means that 54,500 was used. Hope you understand that. We began our raw material, whether it's direct or indirect, 27,500. We purchased $78,000 worth. So 78,000 plus 27,500 is 105,500. So that's how much raw material you had to work with. And then you were left at the end of the period with 51,000, which means you must have used 54,500, the difference. Now they tell you that $3,500 was classified as indirect. So out of that 54,500, we take out or remove the 3,500 that's indirect, so the rest must be direct, 51,000. Okay, and again, I guess they're saying the same thing I say here. Just I think that's why I wish. Well, anyway, it doesn't matter. I hope you understand how I'm saying it. What you start with. What you start with plus what you purchase is what you have available to work with. And then what's left means the rest must have been used or moved to another level, another department. Number 8. Okay. We want to find out what's the direct material for July. Now here we have all this information here, beginning and ending. So we begin with $47,000 worth of raw material, direct and indirect are combined at that level. We purchased $76,000 worth. There you go. So together you had add those two together, 47,000, what you began with, what you purchased is 76,000. You had a total then, if you add them together, $123,000 worth of raw material to work with. You ended up with 40,000. So you must have used $83,000 worth of raw material. 12,000 of it, as you see here, is indirect. So 83,000 minus 12,000 gives you $71,000 in direct material. Okay, and they work it out here too. Just in fact, exactly the same way I did it. Which is, I guess comforting to know. But sometimes you can do things in a different way and come up with the right answer. Okay, let's go to number 9. Again, and this is a nice one. I like this one. I mean, I think it's challenging. First of all, in the PowerPoint slides, I talked about adjusting cost of goods sold. When you over apply or under apply, you have two methods of allocating the underage or overage, if there's such a word as underage. You can either allocate it all to cost of goods sold, and in this case, that's what they do, or you can allocate it between work in process, finished goods, and cost of goods sold. So you begin with, you calculate cost of goods sold, and then once you make the allocation or the adjustment to work in process, we call that the adjusted cost of goods sold. Adjusted cost of goods sold is cost of goods sold that has been adjusted by either the under-applied or over-applied amount. I'll say that again. Adjusted cost of goods sold is cost of goods sold that's been adjusted by the under-applied or over-applied amount of overhead, manufacturing overhead. So what do we have here? It says that the balance in the finished goods inventory account at the beginning of the month was $53,000. Okay, and the cost of goods manufactured was $212,000, and the actual manufacturing cost was $55,300, and the applied was $58,400. So I drew a T account, and on the debit side, I put the actual overhead, which was $55,300. And on the left-hand side, right-hand side, the credit side, I put $58,400, which means that cost of goods, it means that overhead was over-applied by the difference between $55,300 and $58,400, which is a difference of $3,100. So now we're going to have to adjust cost of goods sold by $3,100. But before we get to there, we got to look at the finished goods. Okay? So right now we know that we over-applied by $3,100. So set that number aside somewhere. Because now we got to figure out what's cost of goods sold. So finished goods began with $53,000. Cost of goods manufactured, which is transferred to finished goods, is $212,500. So altogether, finished goods was $53,000 plus $212,500, or a total of $265,500. That was a total of finished goods. At the end of the month, your finished goods was $30,100. So your cost of goods sold must be the difference. If you have $265,500 worth of finished goods, and at the end of the month you only have $30,100 of finished goods, you must have sold $235,400 worth of finished goods. So that's cost of goods sold as $235,400. But that is cost of goods sold as unadjusted. You have to adjust it. So if unadjusted cost of goods sold is $235,400, and you over apply, so you have to reduce it, because that means you're going to debit manufacturing overhead and credit cost of goods sold. Remember that? You should. That means in the adjusted cost of goods sold is $232,300, which you see here. Okay? And they do it here. Again, I think I do it better, but there you go. Okay. All right, let's go to number 10. Well, Bayest Manufacturing uses a predetermined overhead rate based on direct labor hours. Um, Last year, the corporation worked 56,750 actual direct labor hours and incurred $382,000 of actual overhead cost. The corporation had estimated that it would work 60,300 hours direct labor and incur $349,740. So here we have these two numbers to determine the predetermined overhead rate. The estimated $349,740 of manufacturing overhead divided by the estimated direct labor hours, because that's the allocation base, gives you 5.80. So the predetermined overhead rate is $5.80. Now the actual direct labor hours were 56,750. So if you multiply 56,750 by 5.8, you will get 329,150 as the applied overhead. The actual overhead was, what was it here? 382,000. Okay. So what's the difference between the applied and the actual? 52,850. And it was under applied. And you can see that too because, let me see, was that it? Yeah, they estimated that they would work 60,000 direct labor hours, but only 56. So they worked more hours than they estimated, and no, they worked less hours than they estimated, so they underapplied. Okay, and there you go. All right, just two more. Number 11. Again, oh well. I guess I could shrink the screen, but it doesn't matter. They want us to determine the overhead for the year. So Baca Corporation uses direct labor hours as the allocation base. At the beginning of the most recent year, the company based its predetermined overhead rate on the estimated overhead of $245,100 and the estimated direct labor hours. So you divide one by the other, and you'll get $24.27 as your predetermined overhead rate. Now they actually worked though 6,400 direct labor hours. So 6,400 times 24.27 gives you 155,311 applied, but the actual overhead was higher, 245,600. So it was underapplied by the difference, 90,000. I got 9,289, but anyway, 9,272 is certainly it is underapplied. Okay, and again, there you go with the way they do it. All right, we have one more, and that would be this one here. And again, well, something similar. The overhead at the end of the year was, boom. Well, we have here, they estimated the direct labor hours of 21,900, and they estimated the overhead, manufacturing overhead at 521,220. Divide one number by the other, and you get $23.80, predetermined overhead rate. Okay. The actual was 21,750. So if you multiply 21,750 times the predetermined overhead rate of 23.80, you'll get 517,650. You measure that against the actual overhead of 521,220, and you get a difference of 3,570 under applied. So that's it, ladies and gentlemen. Again, if you have any questions or concerns, you can always ask me via email. You also have your SI, Ms. Herod, who's very helpful, who's also knowledgeable of accounting, more than many, because she pretty much close to having her degree. Something which a number of SIs don't even have. So anyway, good luck, and we'll see you next time, or talk to you next time anyway.